Is it time to be backing up the truck on stocks like Warren Buffett has been doing? You just had the Woodstock for Capitalists in Omaha, the annual Berkshire Hathaway shareholders meeting, where Warren Buffett revealed, yeah, we're buying a lot of stocks, $40 billion worth of purchases during the first quarter. This compares to a sizable sale last year. You saw during the last year first quarter, they were net sellers of about $3-4 billion worth of stocks. Not surprising, when things get cheap, Warren Buffett likes to swoop in and buy them. Here it is, buying $40 billion worth of purchases. We're going to talk about these purchases and more, and why he potentially bought each of these different positions in this video. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, and no hype mission focused channel trying to find you exceptional companies and unrivaled investments. If you enjoy learning about Warren Buffett and trying to find these types of exceptional companies, please make a point of hitting that thumbs up and hit that subscribe button. So let's dive into these purchases. And so you see the biggest purchase by far, I believe, was Chevron CVX stock, which is now a top 4 position for Berkshire Hathaway, valued around $26 billion. That is a huge change when you consider that at the end of last year, their Chevron stake was only worth around $4.5 billion. Given about 30% price appreciation in Chevron stock, this does mean Warren Buffett bought, let's say, an incremental $20 billion of Chevron stock. This is a large purchase for them. And given that Chevron management thinks they can generate around $150 billion in free cash flow over the next 5 years, if Brent crude oil stays at $75 per barrel, that would equate to about half of their $300 billion market cap. So keep in mind, this is maybe the logic for why Warren Buffett's buying it, is Brent crude is now over $100 per barrel. So you're looking at this and saying, wow, management might be way conservative here if prices just stay the same. Maybe they could actually do 200 to 300 billion in free cash flow over the next 5 years, in which case you're looking at a company trading at like 5 times free cash flow. And that type of multiple, that's the type of, margin of safety that Warren Buffett loves to see, which is that if you're looking at a company that's not a long-term compounder, he wants it dirt cheap, where you're sort of baking in this margin of safety, getting it, like 5 times free cash flow. If it's a compounder, maybe he pays 10 times, maybe he pays 15, maybe 20 times if he's able to throw in some debt. And so looking at it, it is really interesting to see this. This is one of these potentially dirt cheap plays by him. He also announced around $6 billion stake in Activision Blizzard, which is getting acquired by Microsoft. So this is a merger arbitrage bet, saying, hey, I think the deal will go through, and the $95 per share, in cash that Microsoft offered will effectively go through. And so existing shareholders will get that. That's particularly interesting because it only traded at $76, most recently. And I covered this deal right when it came out. If you want to learn more about, what Microsoft's doing and this, and the value proposition for buying, Activision. But I also called it out to my Unrivaled Investing subscribers in January 21st, 2022, shortly after the deal was announced, saying, yeah, I just bought this for myself, saying, yeah, I think this deal will go through. So it's nice to see that I was in good company with Warren Buffett buying these shares. And that's part of my value proposition with Unrivaled Investing, is where I'm calling out potentially compelling ideas as well as sharing my own personal journey. So I do call Unrivaled Investing out in almost every video, largely because, look, that's what keeps this channel going. So if you enjoy content like this, based on my analytical background, working at a multi-billion-dollar hedge fund and then later as a CFO, growing a company to 40 million plus in revenue, I'm trying to bring professional level content for you, and that's what keeps it going, is Unrivaled Investing. And so I appreciate all the Unrivaled Investing subscribers. And plus, there's a whole new site going on to make it even easier to find the content. So another big purchase that Warren Buffett did was with Occidental Petroleum. Once again, I called that out with a separate video, which you can check out. Once again, based on where oil prices currently are, the price that he's paying for it, and once again, there's maybe a $6-7 billion purchase by Warren Buffett, is that he's effectively paying like 3-4 times free cash flow if prices of oil stay the same. So that's really the question a lot of investors will be asking themselves, is should oil be coming down in the future, or will it be going potentially higher? I also called out HP, which he bought, another couple $1 billion purchase. Once again, this is something very classic Warren Buffett. Why not pay 10 times free cash flow and you always have always have three things when you're considering an investment. You have the fundamentals, you have the valuation, and you have potential capital returns. So if you're buying something at 10 times earnings or 10 times free cash flow, and you're returning all that free cash flow to you, you're getting that 10% minimum if their fundamentals stay solid. So even if there's no growth and there's no future valuation expansion, so you consider fundamentals and valuation, just on that third piece, that capital allocation, he's going to be getting around 10% a year through buybacks. And so that's the framework. Once again, looking at deep value may not be the hyper growth things that a lot of people love to see, but this is the steady Eddie approach that Warren Buffett, has led to just amazing returns over time. And so the question I think a lot of folks are asking is like, should I be joining Warren Buffett, Charlie Munger, and just buying lots of stocks? And like here it is, backing up the truck on several different positions. Now, once again, in full disclosure, I do own a stake in Activision. As I already mentioned, I called out to Unrivaled Investing subscribers. Now, maybe it is a good time to buy. I mean, you've seen recently a huge uptick in margin call searches, where people are looking at their stocks decline and saying, oh my goodness, what is a margin call? Like, what do I need to worry about this? Is my account getting liquidated? So that is arguably, when you see upticks like that, that is probably closer to a buying time than a selling point, is when you see this. This is the point of fear, right? Now, the challenge is that Warren Buffett still has, at Berkshire Hathaway, over $120 billion of cash. So even though he just spent $40 billion on purchases, he is still loaded. And the reality is Berkshire Hathaway generates 20 to 30 billion dollars in free cash flow a year. And so this is a very different dynamic than what a lot of investors are looking at, because he's effectively spent a little more than 1 year's worth of free cash flow. And when most people are looking at their own in potential investments, they're looking at their portfolio and saying, hey, if I want to put an allocation position, you're not necessarily thinking about, oh, this is the cash flow I'm going to generate this year. He arguably is in a very, very different position than most investors. If you have your nest egg saved up, you're not thinking, oh, this is the cash flow this next year and I'm going to be putting it in. They're like, hey, this is what I've saved for retirement, and how am I going to make sure I optimize this for the future? And so it's a very different situation for him, where he effectively has to run just to deploy capital in what he thinks could be compelling bargains, because that cash is just going to keep building up. So has that huge stockpile, 100 billion plus 120 billion in cash. Maybe you net out what he needs to hold for insurance. So maybe it's around 80, 100 billion dollars. Still huge cash position that he's holding. So he still is definitely in the market for bargains. He definitely wants to be shopping. Very different position than investors like you and me. I'm personally, of the mindset that, hey, I'd love to find those compounders, those companies that can grow at a good clip and pay a reasonable price, 10, 15 times earnings, maybe 20 times earnings. But I'd love to see that cash flow, and I'd love to see better growth. Now, but maybe, you've had such a period of strong growth these last few years. Maybe once again, learn from the master, learn from the Oracle, Warren Buffett. Maybe investors should be focusing on the material goods space, like these oil companies, like these, Chevron, which includes both the production as well as refining, and effectively the retail sales. And so you're looking at this and saying, it might not necessarily be time to focus on, hey, what's that growth stock that's unprofitable to be buying? Maybe it's the assets that effectively benefit from inflation, a lot of money printing, like a Chevron, like an Occidental, where the margin of safety is effectively, hey, if oil prices just stay flat. If oil prices stay flat, you could have a great return over the next few years. If oil prices go up, then you could have a crazy return in the coming years, because management across a lot of these different companies has capital return policies to return a lot of that cash to shareholders. My partial concern with some of this is, what if you see just boon years for a lot of these oil producers, and government, U.S. government in particular, which has been running huge deficits, say, hey, we got this huge debt pile, interest rates are moving higher, so we can't really finance this debt pile. And these oil companies have nice profits. And then you have these, knucklehead politicians that think like, oh, they're profiteering off of, the American, they're jacking prices higher. That's not how commodities work, folks. Just a while ago, oil prices were negative. But it wouldn't surprise me if you see the risk of a one-time sort of supercharge tax on the profits for these oil companies. And in my opinion, that is the political risk that is much more heightened in this period, because I think you could probably get support from a lot of Americans with this, because of the notion of like, well, like, who are you screwing over? But the reality is it's more complex in that situation, because you have the pension funds, you have the investments like Berkshire Hathaway, that if you were to do a tax like that, they would get hit. So then the pension funds that are, effectively, this is providing an investment return for all the folks that have, their money with the pension fund. Now they're getting hit. So it's with investing, it's never so simple. There's oftentimes second level and third level effects, and the quick political solution oftentimes isn't necessarily the right one. Anywho, if you enjoyed this video talking about Warren Buffett's latest purchases, please make a point of hitting that thumbs up, hit that subscribe button. I'd love to hear your thoughts. And if you're interested in finding potentially actionable ideas, potential multi-baggers, check out unrivaledinvesting.com. Thanks so much for watching.